and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me Zavan Dubash, and at least for now we can say that the market is holding up in the green after days of meandering in the red. Today it's a solid comeback that the markets have actually registered, almost a 1% gain, and finally it does look like that Nifty has managed to break out of that boring range, and 17,800 has been broken, very close to that 17,900 mark. It's the heavyweights which are doing the bit today. So Reliance Industries is participating, Infosys, TCS, these are the counters which are contributing as much as 80 points on the upside for the Nifty. Bank Nifty, however, is lagging a tad bit today. The MPC outcome was largely on expected lines, 25 basis point hike, though there was no change in stance. But maybe the Bank Nifty is seeing a bit of profit booking. Adani group of stocks have definitely seen a sharp reversal. They are up anywhere between 40 to 100% from the lows that we had seen on Friday itself, when most of the counters were sitting at 52-week low. And Adani Enterprises is the key stock to watch out for. If I remember it right, the low on that stock was around 1,020 bucks. It's right now trading at 2,080. So in a matter of 3 days, whoever bought at that level has already made 100% returns. The market breadth is also quite interesting today, positive. The broader indices are pretty much mirroring the move coming in from Nifty, and it's IT and metals which are leading the pack today, and the mid-cap names at that. So that's definitely kept the stock excited, the street excited, and Avan can't forget what's happening to the entire new age tech world.
Absolutely. Paytm is on a tear, to put it mildly. Do remember, we've got a lot of those stocks in the spotlight as the companies have reiterated their path to profitability. So, for instance, you've got Paytm as well, which has gone ahead and achieved their profitability, and that has come in ahead of the September 23 guidance. You've also got a positive brokerage note on this. Macquarie has upgraded the stock to outperform with the target price at 800 rupees, saying that they see a very visible change in the approach to the management to deliver profit, and clearly the street is cheering that news at 684 now. Moving right on, I just want to mark some of the other stocks within this sphere. You've got something like a Policy Bazaar or PB Fintech. The company has said they are confident of being adjusted EBITDA positive by Q4. They're expecting the credit business as well to be adjusted EBITDA positive by Q4 FY23. Zomato as well. Remember, you have Deepinder Goyal tweeting very recently that they're working their way to profitability, congratulating Paytm as well. And we'll be watching out very closely for their numbers. But take a look at the stock. That's no mean feat. 9.5% nearly, double-digit contribution from margins in the long term. Delivery as well, not far behind. They said they aim to be profitable in the next few quarters itself. No specific timeline has been given, but they said the adjusted EBITDA will continue to improve down the line. And then, of course, Nykaa, we know that the company is already profitable, but there's going to be margin improvement. They're going to be sustaining their costs at sub 10% level going forward as well. And that cluster of stocks is certainly hot in today's trading session. Naresh Mirani as well as Kunal Bothra joining in on the technicals. And as Anisha said, Kunal, we've broken out of that boring range. And yes, it is the large caps that are doing a lot of the heavy lifting. Metals clearly be driving the way. So does that mean now that we're in for a further upside?
Yeah, I think I would probably put it that it's a more vibrant market today as compared to a last 2-3 days of dull market. And I call it vibrant because there are a lot of stocks which are actually showing good strength. So not just the likes of Paytm, which is of course associated with a lot of news flow, but then I think even the likes, even the mid-cap end of the segment, the financial services space, for example, right from the likes of Chola Finance towards AB Capital, L&T Finance, etc. These stocks have been doing exceptionally well. Even Bajaj Finance, for example, has been doing exceptionally well over the last couple of days, and in fact even today as well. So I think it's a lot of sectors which are making a comeback. Nifty IT sector has also made a comeback. TCS is back at an 8-month high for itself. So when you have such kind of a vibrant market, even if the indices remain a bit lackluster, that's an absolutely okay sign because traders are quite busy, trading a lot of stocks in this kind of a market scenario. So I think till the time we just hold on to these kind of stable moves on the indices, and even if the market breadth keeps on improving with every stability on the index, I think that itself is a good sign. 17,700 is a near-term support, and I think for short-term traders who've been initiating long positions can hold on to the index long till the time we're trading above this level.
Okay, let's also look at some of the stocks which are buzzing around on news flow. Credit Access is one stock which has been on a tear since the start of the trading session. It's the biggest gain that we have seen Since July of 2022, it surpassed the 100 and 200-day moving average. The NII increased by 38%, and that's the reason you're seeing that solid surge on the counter. And the management believes this kind of performance is quite sustainable. So that stock holding up with a gain of 7%. Thermax too reported a very strong set of numbers. Biggest gain that we have seen since April of last year. It surpassed the 100 and 200-day moving average, a growth of around 27% on the revenue. The profitability looking high by around 60%, and the order balance also gives quite a bit of visibility as it stands close to that 10,000 crore rupee mark. But Zomato is the stock from the new age tech company which is definitely perking up. You have the results coming in tomorrow, and CLSA believes that Q3 can perhaps mark the turning point for the company. They are expecting a significant improvement when it comes to the profitability, and they are suggesting that as far as the total EBITDA margin is concerned, there could be an improvement of almost 260 basis points on a sequential basis, and that's the reason that stock is up around 9 to 10%. I think we'll have Vinny joining us shortly to talk to us about what the key expectations are with respect to Zomato's earnings. But before I do that, let me toss it across to Kunal just to get his view on that. Kunal, Zomato, Paytm, Nykaa, and even PB Fintech.
Looking very attractive. In fact, Anisha, it's been a lot of time that we've seen, these stocks seeing price, volume, and participation. So I think these three are the key triggers which we watch out for, stocks. Paytm, I think, is one of the major performers, and I think post the move for Paytm over the last couple of days, it's where the markets have started to get confidence in the likes of Policy Bazaar and Nykaa and Zomato, etc. So I would believe that the entire space looks very attractive, and traders should look to buy these kind of names over there, even if it's a short-term trading play.
All right, looking interesting on technicals. Let's find out a little bit more about the kind of commentary we've got from some of these new age tech companies that are on fire in trade this afternoon. Sharad's here to break it down for us. Sharad.
Well, yes, in focus we are having the new age tech listed stocks, and first we will be looking at the path to profitability of which company has actually achieved it. First one being, of course, Paytm, where they have achieved their EBITDA growth, and this is coming adjusted with the ESOPs 3 quarters ahead of the guidance. This was supposed to come in September in this current year. Now, apart from this, there are certain stocks which are actually on their way to path to profitability. As we say, the status is under progress. Now, first one being Policy Bazaar, where their company has stated they are confident of achieving EBITDA positive in an adjusted manner by the fourth quarter of FY23, and this also includes for the credit business. Apart from this, even Zomato, the management has stated they are looking for a double-digit contribution in the margins in the long term, and recently Dipinder Goyal, the head of Zomato, did state that the company is working towards its profitability. Apart from Zomato, we are having delivery in focus, and the company has not given a clear timeline yet for achieving the profitability, but they have stated that they will be achieving profitability in the coming quarters itself. And do remember that their express business is already profitable. Now there is a company Nykaa where already the profitability was already there, and this is coming in before the listing as well. But key commentaries coming in especially on reducing their cost, and this going below the 10% going forward, and the margins to improve because of increase in private brands and the ad income. But now even brokerages have turned bullish, especially on the path to profitability segment. And we can see over here CLSA has given a maintained buy rating with a target of 70 rupees per share, and they've said that the third quarter of FY23 could be a turning point, and they have maintained a buy rating. Even Macquarie has came out with this report on Paytm. They have upgraded it to outperform, and do remember it's a double outperformance rating with a target price of 800 rupees per share. And they have clearly stated that they are seeing a visible change in the management's approach to deliver profit, and this quarter itself a surprise deliver of profit was there, especially in the distribution of financial services.
Thanks very much, Sharad, for giving us those details. In fact, let's hear it out then from Pankaj Murarka of Renaissance Investment Advisors, because he's really stuck his neck out, and when everyone was a naysayer on the street for a lot of these new age tech companies, he was confident. He's been betting on the likes of Zomato, PB Fintech and Nykaa. Let's hear out his rationale.
On the space, we remain very excited because we think this is going to be one of the fastest growing space within corporate India over the next 5 to 10 years. And yes, we have ownership across Paytm, Zomato, and PB Fintech within the space. Nykaa itself was, in terms of valuations, was pretty rich in that sense, and now probably we've seen moderation in that. The good thing about these businesses is that they're going to be on a very high growth trajectory. Most of these businesses, given that customers and consumers are making a rapid pivot to internet, and we are seeing significant increase in digitization and adoption of technology, will continue to grow at 30-40% to my mind over the next 5 years.
Okay, since we're talking about the new age tech companies, let's also put the spotlight on Zomato specifically, and let's talk about the Q3 performance itself or what the street is expecting, because the company will come out with its earnings tomorrow. There has been a hint which has already been given by the tweet coming in from the founder, but what are the brokerages expecting? Vinny will brief us on that. Vinny, take it away.
So we have CLSA, which has come out with its Q3 preview. Now, in terms of overall expectations from Zomato, they expect Q3 FY23 to be a turnaround quarter coming in for the company. Let's not forget, last quarter what we had seen coming in for the company was the adjusted EBITDA in its core food delivery business. That has turned EBITDA profitable. So that is a factor that we are keeping an eye out on as well. Overall, CLSA says that they're expecting a significant improvement in terms of profitability. Expect 260 basis point on a quarter-on-quarter improvement in terms of the EBITDA margins of the company, as well as Hyperpure and Blinkit. That could be a surprise, and we could see a strong growth coming in over there as well. Muted growth is what maybe we could see coming in the gross order value, average order values, and in the total order number of orders that will be placed, because what is happening is now people are stepping out. Dine-in has seen an increase coming in, so order on apps, online apps, is something that is seeing a reduction coming in. So maybe because of that, we'll see a reduction coming in the gross order values, or maybe a muted growth in the gross order values is what the expectation is coming in. Overall, what CLSA is also highlighting that again the quarterly cash burn is going to be somewhere around 150 crore mark. So keep an eye out on that. They've given a target price of 70 rupees per share as of now for Zomato.
Coming in on Zomato. Thank you, Vinny, for joining us on that. But apart from the new age tech companies, let's take a look at what else is buzzing. You have Symphony, which is higher by around 9%. Yes, the results were good, but the key reason why Symphony is higher is because the company has announced a tender buyback. It's coming in at a price of 2,000 rupees per share, which is 100% higher than what the stock was trading at. The overall quantum is quite low at around 200 crores. But nonetheless, that stock is excited. You also have Policy Bazaar, which is gaining not only in terms of what's happening to the new age tech platform, but there is a meeting which happened of the insurance companies with the FM, and there is street which is expecting that maybe there could be some revision as far as the income tax slab is concerned on that. Plus, there could be some other updates coming in. So HDFC Life, for instance, is also up on account of that. Aurobindo Pharma is up 6%. If I have it right, the numbers are tomorrow. So ahead of that, it's definitely buzzing. And cement names, the likes of Nuvoco Vistas, are up around 5%. Shree Cement has, of course, come off from the highest point after the margin performance was quite disappointing. Plus, it does look like that margin pressure is likely to stay. That was the commentary coming in from the management as well. So those are the top buzzers, but for now, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our values, we present the second season of Nivesh Ke Funde. On this edition, we discuss saving and investing, which are both are important concepts for building a sound financial foundation. Take a look. Hello and welcome to another edition of Nivesh Ke Funde. Today, we will talk about something that is at the foundation of a person's personal finance journey.
That's right. We're going to look at the savings and investments and the different roles they play in a person's financial portfolio.
Let's start with savings. It's when we keep aside money for an emergency that we can have easy access to. So basically, savings has high liquidity.
Investing on one hand is using money to get some assets that we hope will grow in future, thus helping us grow our wealth.
Well, under the heading of investing, there are a number of different assets that a person can explore, which provide varying levels of returns along with different levels of risk involved as well.
Yes, so investors can pick and choose the investment options that are in line with their risk and reward appetite, and most importantly, their time horizons. So if someone wishes to invest for a short to medium-term duration, they can invest in debt mutual funds, and someone who's looking to invest for a longer time horizon in a higher risk product with relatively higher returns expectation, they can invest in equity mutual funds.
And there are many options that would be suitable to persons' varying requirements, and the best part is that people can now invest as low as ₹100 per month through different mutual funds.
Another point in managing your personal finances is that a person should be disciplined. Being disciplined with savings and investments is important. And through mutual funds, this discipline is made easy as a person just has to opt for a SIP or a systematic investment plan.
Absolutely, and with the SIP, an amount that is decided by the investor is invested at a time fixed by the investor in a mutual fund picked by the investor himself. So in this way, the investor gets full freedom to choose their investment journey as well.
That's all on this edition of Nivesh Ke Funde. Hope we've been able to explain the difference between savings and investments for you. Stay tuned for more such investment insights only on ET Now.
Markets in fine fettle. Jonathan Chisel as well now joins in on the show to discuss his outlook. And Jonathan, clearly it seems like the Reserve Bank played according to what the street was penciling in. And after that, we're seeing a pretty comfortable breakout in the markets, and that's largely being led by what's going on within the large cap space. Is your assessment that this kind of momentum in the markets can continue, and will it largely be driven by the large caps?
Yeah, so I think clearly the RBI delivered a fairly consistent message with what we're hearing elsewhere on the globe, and markets have cheered that. Obviously, India's come off a little bit over the last few weeks, and yeah, I guess the large cap space has suffered a bit of foreign investor selling as well as domestic selling. And yes, I would agree that probably the sort of bad news around that is probably we're past the peak there. And obviously some relief potentially from an interest rate perspective is relatively good news for the market. So yes, it looks like for the moment we've probably bottomed out.
Jonathan, what has been your view with respect to the entire Adani saga? And since you are part of the entire FII group, has that changed anything materially of how the FIIs are looking at India and the entire corporate governance issues?
I think long-term India watchers are aware that you have to be cautious with. It's not just India; it's many markets where when you are investing in companies where you have a promoter with a very large holding, it's essential that you understand who you as a minority shareholder are investing into these companies and try and understand the behavior of these promoters. So I think these sort of issues do happen from time to time, and it's not, to be fair, just in India. This happens in all equity markets. But yeah, it shouldn't be a surprise. Of course, these things always happen, and they come out as a surprise to certain parts of the investment community. But I think people, to do your homework, it should be something you try and factor in.
Jonathan, what's your outlook in terms of the overall portfolio at a time like this? Given the fact that you continue to remain very bullish on the domestic growth story, have there been any recent additions?
Not really, to be honest. Clearly the overall, some of the sectors have given up a little bit of the recent gains, particularly in the large cap space. Some sectors continue to do very well. I think overall India has received a bit of bad press to an extent. It's sort of come from this whole Adani affair, but underlying it, India remains a very attractive market with good companies with very attractive growth rates coming through for the foreseeable future. So I think most people still, yes, obviously the China opening up has perhaps in the short term encouraged some short-term money to flow out of India into other emerging markets, particularly China. But I think the longer-term, medium-term story still remains very attractive for India. And therefore, the domestic sides, companies still look good, as do, to be fair, a lot of the exporters as well.
Sector-specific and stock-specific, and try and understand, where are you putting the incremental money to work? In India itself, is it still the financials that are top of the pecking order?
Yes, I think I've said it many times. I think Indian financials, you get so much exposure to many different parts of the economy via the banks and other financials. It is a huge sector in India and remains a core sector, and certainly one of the most exciting to play. Very domestically focused, and one of the other advantages that India has is you have a very conservative central bank. And whilst it is quite difficult for a lot of the Indian banks to operate under that environment, they're used to it. And certainly from an investor perspective, they're extremely conservative. And that sort of helps when you're trying to look at banks and understand their balance sheets and all the other risks that come with investing in the financial sector.
Jonathan, have you looked at any of these new age platform companies at all? Zomato, Nykaa, Paytm, Policy Bazaar, anything that you have managed to look at deeply?
To be honest, it's a sector which I think has a lot of promise and very high growth rates. The problem we've traditionally had is there's very few companies who actually make significant amounts of money. And when you look at some of these names, what's their competitive moat? How do you stop other companies coming in if you're making exceptional profits? So we found it always quite difficult to look at some of the names. We haven't really done a deep dive on a lot of the names, if I'm honest, for some time. But I think it is certainly good news that the choice of some of these platform names and other e-commerce related names is certainly got a lot better over the last couple of years in India. And I would cheer, as more companies come to the market, it gives investors greater choice. But overall, it's a space that we find difficult. Yes, there's tremendous growth rates, but I think that there is also a huge amount of competition, and a lot of these names have yet to make any proper profits yet. So it's a space we've tended to avoid, and probably we have to do a bit more work on that at some stage.
All right. Thanks very much, Jonathan. Appreciate your time. Good to have you on board assessing the overall market metrics and your top sectors. Let's get in some closing trade strategies as well. And Naresh, good afternoon. Sorry, we're coming to you half an hour after the show started, but it's been a bit jam-packed with new age tech and all that. So take us through your closing trade.
So that's a buy on Indraprasth Gas Limited. We are seeing a breakout move in a lot of these gas names. So it is IGL, which seems the best out of it. The stock has a resistance at 440-45. Once that breaks, it gets into a much bigger momentum. So like the stock and expecting a breakout in the whole gas sector.
Kunal, let's get in your pick.
So the stock which I'll be looking to trade would be AB Capital. I think it's a very interesting name popping up on the charts back again. Also trading above the 50-day moving average after quite a bit of time. So that's the stock which I would look to buy at current levels.
All right. Thanks very much for those closing trade recommendations. And as we take a break at the Times Network, we're always looking to create investor awareness and make financial matters simple for our viewers. And keeping with those values, we've got the second season of Nivesh Ke Funde. On this edition, we're discussing India's economic growth and how that can benefit you. Listen.
Hello and welcome to yet another edition of Nivesh Ke Funde. I'm Ajay Sharma. Now it's a well-known fact that India's economy is on a very strong growth trajectory.
Yes, Ajaya. In fact, India is considered the fastest growing emerging economy across the world.
But Kavita, how can the everyday Indian be a part of this growth story? And what are some of the avenues that they can explore?
Now, one of the relatively easier and simpler ways to do this is to invest through mutual funds.
Absolutely, mutual funds provide the investor an avenue to invest in multiple asset classes.
Yes, Ajaya. Through mutual funds, an investor can get access to equity of shares of the Indian stock market as well as global stock market.
Not just equity, they can invest in bonds and debt market and even invest in gold and silver through the mutual fund route.
Right. One more thing, Ajaya. By investing through mutual funds, a person can invest in small denomination and does not have to make large investments at one go.
Yes, this helps the investor continue their investment at regular intervals for a long duration of time. Additionally, when a person needs money, they can redeem the mutual funds unit worth the amount they require easily.
Absolutely. One does not have to sell the entire investment. Thus, one gets the benefits of liquidity and flexibility also.
So if you believe in India's growth story, make sure you're a part of it. And the easy way to do that is by investing in mutual funds.
And with that, that's all on this edition of Nivesh Ke Funde. Thank you for watching.
Well, Well, a bit of a let-off from the highest point of the trading session, but nothing to worry about at all because the broader markets are quite excited. You have a gain of almost 0.9% when it comes to the mid-cap index, and it continues to be the entire Adani pack which is showing strong traction. So Adani Enterprises is now up 18%. Adani Ports is higher by around 7%. Plus, you have other names like Adani Wilmar, which just reported its numbers, and the number is quite decent coming in. The margins have expanded. The profitability came in at 246 crore for Adani Wilmar, and it has managed to record a volume growth of around 16%. But since we're talking about earnings, let's also address the earnings coming in from Symphony as well. In a seasonally weak quarter, the company has managed to report a growth of 35% on the top line. The margins have expanded on account of the softening of the input prices as well as the price hikes that the company has taken. But what about the summer season which is lined up? Let's welcome on board Mr. Nrupesh Shah, the ED at Symphony, to talk to us about that. In a seasonally weak quarter, you've managed to do quite a bit, but does that mean that this summer is going to be a bumper one?
No, all the expectations are like that. Pre-season sales is like that. And even as of now, in the month of February, in many parts of the country, the temperature has touched or crossing beyond 35 degrees. But importantly, across the channel, across the geography, in the domestic market, there seems to be very, very positive signal.
Okay, Nrupesh, that point is taken, but you have already taken quite a few price hikes because of the volatility that we saw in the commodity prices last year. How is the pricing expected to move this particular year now? Are you likely to take more price hikes because you had done some upgradation, or we have seen the worst already?
So, of course, it seems that in terms of the input cost wise, we have already seen the worst. In all, we have resorted to about 15% price increase in the current year. However, having said that, still input cost at this point of time is higher than what it was at pre-COVID level. And still we may go for some more graded price increase. And our aspiration is to go back to original EBITDA percentage on standalone and console basis, which used to be around 28 to 30%. Of course, in this quarter, we have improved our EBITDA margin percentage, excluding other income, to almost 25.5% versus 22% last year.
What is the outlook then, Mr. Shah, when it comes to your overall export revenues, and how do you see that growing versus domestic revenue as a percentage of the revenue pie?
As far as exports, mainly to subsidiaries, in United States and Australia, we are witnessing the headwinds of the global economic situation. So particularly exports to US and domestic demand in Australia are showing the weaknesses.
The stock is quite excited on account of the buyback announcement also that you have made. The price is quite attractive at 2,000 rupees. But my question to you is, the overall quantum is a bit low at just 200 crore, and the acceptance ratio given the market cap becomes a lot less. Could you talk to us about the thought process around the price that you have set and the total quantum?
So the buyback value and volume is decided as per the SEBI guideline, which allows maximum 25% of the net worth. And hence this was the maximum permissible amount. And in addition to 200 crore, about 50 crore will be outflow towards taxation and other expenses. Essentially, out of our net worth of 800 crore, 250 crore will be reduced, which will ultimately be reflected in much better ROCE percentage, RONW percentage, and also EPS accretive. And we are sitting on a treasury in excess of 600 crores, so we are well placed.
Okay, Mr. Shah, we'll let you go on that note. Appreciate you joining us on the show. So quite excited about the prospects of the coming summer season. The initial channel inventory does suggest, and the demand coming in from the pre-season sales is also something which is suggesting a bumper summer 2023. But shifting focus to the decision coming in from the MPC, wherein the repo rate was raised for the 6th straight time in a cycle that was started to fight the soaring inflation. While market reaction may have been subdued as the outcome was already priced in, for consumers, the bigger takeaway would be the impact coming in on the EMIs, especially on the property loans. So how does the repo rate hike impact your home loan? My colleague Kavita is joining us to break that for us. Hi, Kavita.
Hi, so exactly, it's a 25 BPS rate hike, and what's going to be the impact on your EMI? Talking about home loan or auto loan, we get you an approximate hike in your EMI, and this is the kind of burden that you will have to figure out and talk to your banks, because a lot of banks have stopped raising the tenure for you to adjust your EMI amount. But then let's get you the breakdown first. We are talking about the impact on your home loan or your EMI first, and if at all, like we have taken 50 lakhs home loan over here, and as you can see, the rate hike, which is almost 44.12, and the increase you can see is almost of 45%, and the amount that's gone up is from 38,000 to 45,000. That's almost a 45% increase in your EMI, and this is the 1 year figure, the 1 year rise that we are talking about that we've seen, and considerably in May 22 it was 40 BPS raise, December 22 it was 35 BPS, and in Feb 23 now it's 25 BPS. You know, starting from 8.6%, the interest rates have gone up, and now we can see it going beyond 10%, even 11.1%, taking the current rate hike under consideration. We get you the auto loan, and over here the assumptive figures which we've taken will be presented on your screen, and approximate amount of your auto loan, if I have to consider, you know, which can be of almost 5 lakh. And over here, your EMI has gone up by 25 BPS if we have to count in that. It's almost 30.6% increase in your EMI amount, and that comes to 16,933. If a year back your auto loan EMI was almost around 14 to 15,000 per month. So that's the approximate breakup we've got for you, and that's the impact of loan that you can see on your car EMI, on your auto loan, and 30.6% increase since April 21.
All right, thanks very much, Kavita, for breaking that down for us. That's the impact on the EMIs. Moving right on then, it's New Age Tech that's really dominating this show, so can't help but listen in then to none other than the founder and CEO of 197 Communications, Vijay Shekhar Sharma, who spoke with managing editor Nikunj Dalmia about Paytm's profitability. When asked if Berkshire Hathaway is still an investor in the company, here's what he had to say.
We are still shareholder full as much at the time of IPO. September 2023, which we've given guideline for EBITDA before ESOP cost, we will definitely be able to beat it by significant high pre-results. And it has been possible because the estimation of how payment will make money, whether the subscription product will take off or not, estimation of how credit will perform, the portfolio and many other things, our partners based on which they give us money, all those things have come out great supporting numbers to us to tell that we will be able to deliver profitability way before September 2023. Obviously, you will see this quarter's numbers coming very soon, and hopefully by that time the picture, that word that I'm saying, would get far more clearer.
All right, that was a previous conversation that Nikunj had with Vijay Shekhar Sharma when in Davos. 17,871 on the index, just going to mark some of the movers on the frontline index. And yes, while metals continue to dominate that winners list, there are a lot of Adani Group stocks like Adani Enterprises, 20%, Adani Ports as well, that's active in trade, HDFC Life, SBI Life, Reliance Industries packing in a punch, Apollo Hospitals as well as Hindalco, TCS and Bajaj Finserv. Mahantesh Sabarad as well is joining in on the show. Mahantesh, thanks much for taking time out. It's pretty commendable and unrealistic, if you will, the kind of market cap erosion that at one point in time, not so long ago, we saw in the Adani Group stocks, and now the very ferocious comeback. Your take?
I think it's a long way to go. Actually, the fall has been much steeper compared to the rise right now. So in percentage terms, the rise may appear quite good, but not all investors are able to participate in that rise. I would still wait for that volatility to subside really before one would really start looking at the Adani stocks afresh. As it is, I think there is a need for a lot of clarity that that has to come about in terms of how the overall debt situation will be handled, how the cash flows will get generated, and so on and so forth. So I would sit at the sides and just watch what's happening.
Sitting on the sidelines as far as the Adani Group of stocks are concerned, but in the meantime, also wanted to flag out the earnings coming in from Escorts Kubota, because it looks like it's decent set as far as the first reaction is concerned. Okay, it's not doing much at the moment. We'll track that just in a bit. But separately, you also had result reactions come in for a lot of other counters. And for now, actually, let's address some of the price volume action buzzers. PB Fintech is one stock which has seen a breakout from the downward sloping resistance. It's been advancing for the last 5 trading sessions, and today as well, it's sitting with hefty gains. Plus, we'll get the commentary coming in from that meeting that the insurance companies had with the finance minister, and that is probably something which is impacting the stock price. TCS, that one has hit a 9-month high today. Of course, it's signed that large deal with Phoenix Limited in the UK, valued at around £600 million, and has seen higher highs and higher lows for 5th week. And this is the largest BFSI products and platform deal that the company has signed in the last 3 years. Jindal Steel from the entire metals pack is also quite excited. Bullish belt hold candlestick pattern. It snapped out of the 4-session streak of lower highs, and a hammer candlestick pattern on a weekly time frame is what it has already panned out. Nuresh, your take as far as some of these large caps are concerned, Reliance, TCS, Infosys, they are quite excited today. You'd want to take a punt on any of them?
So Reliance is the most interesting one because the stock is back to the same prices where it has been. So it topped out at 2300 back in September 20, then gave a breakout in 2021, went up to 2750, attempted it thrice, and now we are back to 2300 odd levels. The same was the low almost close to it in March 2022 during Russia-Ukraine crisis, as well as very recently in terms of windfall taxes. So this is the zone from where it has generally bounced back. So out here, this is a stock which can surprise on the upside and has a good risk reward. So out here, one could now keep a stop loss at 2300 and buy and expect a move towards 2450 to 2500. So this becomes a buy on dips and the most interesting large cap as of now.
In the meantime, just want to highlight some of today's mid-cap numbers. You had something like a Graphite India. It was pretty disappointing with the profits nearly halving to about 53 odd crores versus 132 crore rupees. Even the consolidated EBITDA came under pressure, and the stock clearly bearing the brunt of that. It's been no doubt a good quarter for Dreamfolk Services. We'll be interacting with the management tomorrow, but margins have expanded. We have, of course, seen travel come back with a vengeance, and therefore you've also got the profits coming in at about 18 crore rupees versus 6.2 crores on a year-on-year basis. Shree Cements as well, which came out with its numbers at 276 crore rupee PAT, was a tad below what the street was penciling in. The EBITDA came in at 708 crores and margins bang in line with what the street was expecting at about 17%. The management as well talking about how the cement sector is poised for robust growth down the line. And speaking of cement, Mahatesh, just wanted to get in your outlook as to what some of your top bets are within this space.
So as far as cement is concerned, I think the demand recovery is just about happening. We had the companies under a lot of cost pressure the entire last year. Commodity prices, as you know, were sharply moving up. Most of the cement companies saw margins actually decline. But from purely, picking perspective, the pecking order should necessarily have to be with respect to the overall capacity that the companies have. The larger the company, the better it would be, is the simple metric one should look at, because it would be able to ramp up its production as the demand starts moving higher. So obviously one should look at the industry leaders within the cement space. Costs are something that is really coming down, and so most of the companies should be able to throw up useful cash.
Cost can also come down on that GST reduction that the FM was batting on, because she suggested that there could be a case that can be made for the GST reduction on cement to 18% versus 28%. And there are brokerages who are talking about that this could lead in a price reduction for the consumers to the tune of around 7 to 10%. So that would be quite a shot in the arm for the entire cement pack as well. But separately, Hero MotoCorp, the con call was on just a few hours ago, and they're talking about how gross margins are likely to improve for the next 2 years for the company as well as industry. In the quarter gone by, however, the uptick from the rural demand wasn't as much as the company was expecting, and that's why there was a bit of a disappointment. Maybe we can pull out those commentary as well, because they are talking about lower uptick in rural segment as compared to the urban markets in Q3. Softer policy rate hike this time around, they believe, is going to allow for price hikes, which are going to be very limited going forward. That again is a positive, though there might be an impact of 500 rupees that comes in on account of the transition to BS6. Green shoots visible in UP, Bihar, especially as the marriage season has been extended, and the positive commentary regarding the demand continues to really hold up. Mahantesh, wanted to get a sense about the rural recovery. The governor today also mentioned that they are seeing signs on the ground, but at least for now, whether it is the FMCG companies or the auto numbers, it's not showing in the numbers. Do you think this is just a lag effect, or this is still a green shoot which will take time to materialize?
I think the underlying problem is the inflation that has been prevailing very high for the last year or so, and that's really affecting the ability, the disposable income ability that allows one to spend more on discretionary products. So we've seen FMCG commentaries starting with Lever talking about how the volumes have dropped. While there is a price growth that they've been getting, the volumes have clearly dropped. Same has been the case with the two-wheeler companies. So unless and until we see inflation trending down, it's going to be a little tough for the rural economy to really grow. We may have good agricultural growth happening, which is what the RBI governor also alluded to. But then unless the inflation conclusively comes down, it's very difficult to see demand perking up in the rural space.
Meantime, Airtel, Bharti Airtel in their conference call as well, talking about how they've increased the minimum tariff to about 155 from 99 rupees in 17 circles. The digital business annual revenue run rate is more than 1,000 crores, and they're also going to expand a lot more into rural. Kunal, earlier this morning, our fundamental guest was saying that this is clearly one of the pure play telecom players that is going to stand the test of time. What's the view from an entry point into Bharti Airtel? What's your outlook?
I think it's a good zone to enter Bharti Airtel for someone who specifically missed out. Even last time around, the stock in the last 3 months has corrected from 860 to now 775, which is at best a 10 to 12% correction for Bharti Airtel. And I think you don't tend to get such kind of opportunities every time with the stock. It has a very low tendency of going into sharp phases of 10%, 15% correction. Even the last time, for example, the stock went into a correction was in the month of February 2022, where the stock topped out at 780, corrected towards 630, 640 odd levels, almost a 15% correction. And then from that 640 levels, the stock went on to make a high, cross about that 780 mark, and even cross about that 850, 860 levels. So I think it could be very similar fortune for Bharti Airtel this time around as well. The stock is holding on to its 200 DMA in the last 2 weeks of this correction, and that itself is a strong sign that the stock can probably restart a rally. So for trader, I think it's a good zone to buy Bharti Airtel. Would aim for a target in the next 3 to 6 months closer to 850, 60 levels for Bharti Airtel.
Okay, so that's about Bharti Airtel. But for the market, the good news today is it's a very broad-based recovery that we are witnessing, because all the sectors are actually holding up in the green. And even if you pull up some of the mid-cap names, it's quite vibrant a market, as Kunal also pointed out. Now, in terms of the key stocks, Info Edge, for instance, is moving up higher. Remember, it has stake both in terms of what Zomato does as well as PB Fintech. So on account of that, you're seeing a rub-off impact, and this is something that Nikunj also highlighted at the start of the trading session itself. Nuvoco Vistas is the other stock from the cement pack, which is perking up, so a gain of around 6% on that counter. And we're also watching out for the numbers coming in from Escorts, which are looking a tad bit muted, and that's why you're seeing a negative reaction on that counter, down about 1.3%. As far as you have Escorts Kubota. But time now to get the BTST ideas out of the way. Kunal, what is on your list of recommendations as a BTST trade? So
the first one is about Aditya Birla Capital would remain bullish on the stock, expecting the stock to head towards 155 over the next 1 or 2 trading sessions. Buy with a stop loss closer to 144. And the second would be interesting pick. It's about Havells. I think that stock has come out of a huge consolidation, and it's forming a classical diamond pattern, which is a very rare kind of a pattern on the short-term charts. So would suggest a buy, 1260 as a target, stop loss at 1180.
Okay, let's get in your picks then. BTST trades, Nuresh.
So first is a buy on Indraprasth Gas Limited, IGL, which has given a breakout over the 433 mark on the short term, expecting a quick move towards 450 plus, stop loss at 428. Second is a buy on LTI Mindtree, which has continued the momentum in the small cap IT space, a stop loss at 46.70 and a target price of 48.50.
insurance companies are also making a comeback. So HDFC Life is up around 5.5%. Max Financial is seeing a surge of around 5.5%. And then, of course, you have the PB Fintech stock, which is up in trade. Mantesh, do you believe that the reaction that we saw on the stocks post-budget was a bit of a knee-jerk reaction? And there is an inherent growth that the street should start penciling in?
Yeah, I think the life insurance businesses have been growing quite sharply. In fact, the current numbers in terms of the premiums that they have accumulated has been growing quite sharply compared to what we saw earlier. So if that growth momentum continues well into the next year, if that's how the expectations are, the reaction to the budget, therefore, from the life insurance companies was indeed a knee-jerk reaction. I think the long-term business fundamentals for most of them are intact. Unless we see further degradation in terms of overall insurance products penetration, I wouldn't bet against any of these stocks.
Okay, fair enough. Just mapping out some of the other stocks that are abuzz within the mid-cap arena, given that that index as well is holding on neck to neck with the frontliners. So you're seeing quite a bit of traction building up on that front. Check in on names like an Aurobindo Pharma, 6% plus, Max Financial Services as well as looking smart. L&T Finance Holdings is in the green, Bank of India along with Lupin and L&T Tech are some of the other smart movers. Let's get in your take on the charts, Nuresh, Aurobindo Pharma, and have you had a look at any of the mid-cap cement counters?
So Aurobindo Pharma is a tough one because the trend has been terribly down over the last 1 year, corrected from 1000 all the way to sub 500, 450 levels and now towards 400. So would not really take a call here. We'll wait for some more recovery and a consistent move. In terms of the mid cap and the small cap cements names, the stock which pops up on the technical radar is Dalmia Bharat. The stock has been trying to cross that 1900 to 1950 mark for the last 2 months. If that breaks out, that could make a 15% move from here on. So I would be looking out for Dalmia Bharat in the cement pack.
Bharat in the cement pack, and Aurobindo Pharma reports numbers tomorrow. So, of course, ahead of that, maybe Street is penciling in, and as was the case with Zomato as well. In fact, since we're talking about the cues which are lined up for tomorrow, it's going to be the weekly options expiry tomorrow. So, expect some volatility around that. Maybe we'll see the mark of 18,000. Who knows? Let's see how it really pans out. We'll also get the US initial jobless claims data as well as crude oil inventory data. We had seen that big move last week when the jobless claims data was out. So let's see what the number is this time around as well. In terms of earnings from the Nifty pack, you have Hindalco, which will report the numbers. But separately, Page Industries, Hindustan Aeronautics, HPCL, Zomato, LIC, Adani Total Gas are some of the other counters that you need to watch out for. In some other key events, Prime Minister Modi is going to virtually address a meeting of G20 Sherpas, so that will be interesting to watch. And Ola CEO is likely to unveil the new product launch, so that will also be interesting. And at 4 p.m. today, the Prime Minister Modi is also going to address the Parliament. So let's see what kind of commentary comes out from that. It's going to be a vote of thanks for the President, but let's see what really comes out if there's any commentary regarding the Adani Group, because that continued to be in the spotlight today as well. And let's start wrapping up the markets then, because it was the day when the RBI monetary policy decision came out, largely on expected lines with a 25 basis point hike, though there was no change in the stance. We saw a bit of wobbly move after that, and the Bank Nifty underperformed for most part of the trading session, but at least by the end of it, we have managed to break out of 17,800 on the Nifty. The Sensex is up around 350 points, and the broader markets are quite vibrant with the advance decline ratio being positive. Sectorally speaking, it was a very easy and smooth sailing today in the sense that most of the sectors go home with a bit of a green tinge. You had the metals pack that was quite excited because of the gains led by Adani Enterprises. IT also had a good day. The large deal win on TCS really rubbed off on other companies, and the initiation by Nomura on Coforge was also something that supported the sentiment. We had the new age tech platform companies that were the key highlight today. So Paytm ends the day with a gain of around 16%. Zomato was up around 9% ahead of the earnings, and Policy Bazaar was the other counter, up 7%, with Nykaa also following with the gain of around 6%. Cement stocks, they were in focus on account of that GST reduction news. So Novoco Vistas was up around 6%. You also had Shree Cement reacting to earnings, wherein the management did highlight while the demand outlook is strong, its margins which might be under pressure, and that kept the stock a tad bit tepid. Result reaction also seen on Symphony, which perked up by 8% on account of that buyback news. Plus, of course, Adani Ports and Adani Enterprises they continue to be on the higher side, with in fact Adani Enterprises ending the day with a 23% gain. Credit Axis Grameen was also result reaction. On the losing side, it was names like Bharat Dynamics, Phoenix Mills, which were a couple of result reaction, and Naveen Fluorine, in fact, also did not do much. But let's see, Avan, whether tomorrow as well, it's the new age tech platforms that continue to rule the roast, because today that clearly was the key point.
Absolutely, and tomorrow we'll be watching out for numbers from the likes of Hindalco, MRF, Voltas, etc. that will be delivering their earnings. But with that, then we'll wrap it up on this edition of Closing Trades from the team that put the show together. Many thanks for watching.